Democratic darling Alexandria Ocasio-Cortez has just released a video with Now This News, in which she calls upon New York Governor Cuomo to impose a wealth tax on the state's billionaires in order to relieve immigrant communities who are suffering from a lack of food, housing, and employment. AOC's argument can be summed up thusly. 1. Billionaires have collectively increased their net worth by $400 billion as a direct result of the coronavirus lockdowns. 2. 74% of black and brown immigrants in New York lost their jobs as a direct result of the coronavirus lockdowns, but hardly any of them qualified for unemployment. Conclusion? We ought to impose a wealth tax on the unrealized capital gains of billionaires and redistribute that wealth to the immigrant communities who are suffering. As per the usual, AOC's argument suffers from fundamental misunderstandings of what wealth actually is and how economics actually works. Let's go through them now. We'll break down AOC's case for a wealth tax against billionaires point by point. Point number 1. Billionaires have collectively increased their net worth by $400 billion as a direct result of the coronavirus lockdowns. While this is technically true if you isolate the right period of time, this claim is extremely misleading because it makes it sound like billionaires actually acquired significant new sources of revenue or property holdings as a direct result of COVID-19. However, you have to consider what net worth actually is. A person's net worth is the estimated total value of all the possessions that they own, tangible or intangible, minus any liabilities. In other words, if you own a house, shares of stock, and have a lump sum of cash, then the price that your house would sell for on the open market, plus the current price of your stock portfolio, plus your total lump sum of cash would be your net worth. However, your non-cash assets, particularly intangible ones like stocks, are constantly fluctuating in price due to supply and demand in the market. If, for example, you own 50 shares of stock at a current price of $7 per share, then the portion of your net worth represented by those shares of stock is $350. However, in as little time as 1 hour, day trading suddenly could result in the price of those shares rising to $8 per share, raising that portion of your net worth from $350 to $400. However, at the close of the trading day, the value has suddenly dropped to $6 per share, leaving that portion of your net worth at only $300. But tell me, throughout the entire day, regardless of what the share price was at any given time, how many shares of stock did you own? The answer is 50 shares. You owned the same amount of shares at every point in time that day, regardless of what the price fluctuations might have been. This is primarily what is behind the claim that billionaires have increased their net worth by $400 billion during the lockdowns. While it may be true that the prices of the assets billionaires already owned, particularly intangible assets like stocks, have collectively gone up since March 19th when most of the lockdowns went into effect, billionaires for the most part did not acquire more assets than they already had. The theoretical price of those assets simply went up. In other words, if every billionaire sold all their assets at once, $400 billion represents how much money they would make. But until such time as the assets are actually sold, there is no real increase or decrease in holdings. Beyond this, author Brian Riedel at National Review has pointed out that the only way you can conclude that billionaires have seen their net worth increase by $400 billion or more since the pandemic is by only evaluating the change in stock prices that occur between March 17th and June 17th, 2020, completely ignoring the steep drop in prices that occurred in February when the pandemic first kicked off. Since the pandemic was indeed a factor in the market prices even before most of the lockdowns were formally put in place, it is clearly disingenuous to report only the data from March onward. Point number 2. 74% of black and brown immigrants in New York lost their jobs as a direct result of the coronavirus lockdowns, but hardly any of them qualified for unemployment benefits. This claim is interesting because if you look at the website for Make the Road New York, the source from where AOC draws this claim, They provide detailed instructions regarding how to apply for unemployment benefits, and per the official sources, anyone who lost their job as a direct result of the COVID-19 lockdowns, who was in fact legally eligible to be working in the first place, should be eligible for unemployment benefits in New York. Assuming AOC's claim is true, the vast majority of immigrant families who lost their jobs but were ineligible for unemployment benefits must either have been illegal immigrants who weren't authorized to be working in the first place, or must have lost their jobs due to poor performance or some other reason unrelated to the lockdowns. Regardless of where you stand on the issue of open or closed borders, it should be obvious to anyone with half a brain that providing welfare benefits of any kind to illegal immigrants will only incentivize more illegal immigration, whether or not such immigration is actually in economic demand or not. This exponentially increases the price tag for such benefits and ensures that it will be impossible for the government to collect enough taxes to pay them. Conclusion: we ought to impose a wealth tax on the unrealized capital gains of billionaires and redistribute that wealth to the immigrant communities who are suffering. Here, we have to again emphasize that unrealized capital gains do not represent an actual increase in the holdings of billionaires. All these so-called gains represent is the fact that the market price of the assets already owned by billionaires went up over a certain period of time, even though those assets were not actually sold. A wealth tax imposed on these gains would raise difficult questions. When would these taxes be collected? Since the prices of assets, and particularly intangible assets like stock, fluctuate constantly, when would the lock-in take place to determine the actual net worth that would be taxed at any given time? Finally, how exactly does government confiscate 20% of a piece of property like a house, or a person's stock portfolio? Would billionaires be required to sell their assets so as to submit the appropriate portion of the price of those assets? And beyond that, there is no guarantee that the seller would actually end up with the theoretical amount that was valued when they actually sold it. The truth is, we don't have to guess what would happen, because this wealth tax that AOC is proposing has already been tried. The nation of France already tried a similar strategy to tax its millionaires and billionaires, and the exact same rhetoric was used. The rich are getting richer, the poor are getting poorer, and it's time the rich paid their fair share. And so the good progressive politicians of France imposed a wealth tax. You want to know what happened? Tens of thousands of millionaires and billionaires simply said, au revoir, sold their properties, and left the country so as to escape the ridiculous tax burden. They were already paying incredibly high tax rates before, but the nation of France was now left without a penny from these folks who weren't living in France anymore. What makes you think New York billionaires wouldn't do the same? They certainly have the means to just up and leave. Beyond that, the housing shortages, food shortages, and other problems that stem from the shortage of resources cannot be solved by simply throwing money at them. Like most cities with these problems, rent control, zoning laws, mandatory state inspections, and other such immense red tape bureaucracies disincentivize producers from actually producing more housing and food, the only things that can alleviate the shortages. Without dealing with the underlying supply problems caused by government regulation, throwing more money at these issues won't do squat to fix them. So there you have it. Not only is AOC's idiotic wealth tax based on bad information, it wouldn't work and couldn't solve the problems it was supposed to even if it did. But then, are we really surprised? And that is my 2 cents. Take it for what it's worth. Thanks everyone for watching. If you liked this video, be sure to like, share, and subscribe, as well as hit the bell to receive notifications so that you never miss an upload. And if you're a fan of my channel, please consider supporting me on Subscribestar, Bitbacker, or Patreon to receive special rewards. All links can be found in the About section of my website, my2centsvideos.com.